Good afternoon, everyone, and welcome to today's webinar. Today we are looking at the corporation tax, the desktop corporation tax epAC update epCT3.13.02. And today our panelist is Kyle Barford, our tax product manager. My name is Tom Jeffrey. I'm one of the education and media technicians at CaseWare UK, and I will be just making sure the session runs smoothly and also here to receive your questions. Kyle's just joined us on camera. Hi, Kyle.
Hi, Tom. Just had to find the mute button.
So talking of questions, if we just jump to the next slide, you'll be able to see how you can submit those. So if you're not familiar with the process already, you've got the question field in the GoToWebinar control panel, and you can enter your questions there, and I'll put those to Kyle when I can. We'll see if we have time at the end for a Q&A session as well. Those questions will go into a Q&A document, which we will publish on the knowledge base. We're also recording the session, so that recording will go on there, and it will also go on our YouTube channel. If you want to ask your question live via your microphone, then use the hand raising feature there, the little hand icon, and I'll send you an unmute request and you can ask your question live. So that brings us to the end of the housekeeping. I am going to go away for a bit and I'll hand over to Kyle so we can have a look at the content.
Cheers, Tom. So, hi, everyone. For those of you who haven't been on a webinar with me before, my name's Kyle Barford. I'm the product manager for tax here at CaseWare UK. So today we're going to be looking at the most recently released epAC for corporation tax, that's epCT3.13.02. With this going out in April, it was the kind of annual update, so forms, rates, taxonomy updates, all of that good stuff. But we do have some content in there as well in terms of worksheet changes, which I'm going to go through in a little bit more detail in this session. So the primary piece of content in that release, other than the annual update, was the research and development supplementary page CT600L. So that's a new PDF page which is going into all returns from the 1st of April 21 that have an R&D relief claim. You don't need to include that PDF if you're making an enhanced expenditure claim only. This is for credit claims, so the SME payable credit claims and the RDEC for large companies. Also in this epAC, we've introduced the new cap on SME scheme R&D tax credits, which applies in files with the start date on or after the 1st of April 2021. So that cap is based on, there's a fixed amount, and then the cap is based on the PAYE and NICs paid by the business. So although that may be a little further down the line for a number of companies, that is available now. Then a few other bits that we'll be talking about. I'm just going to readdress the expiry of the AIA temporary uplift and the content that is in the products with respect to that, although that is still a little time away. And the other new content that we've got in, some new tax adjustments worksheets to support tags in the 2020 taxonomy that was introduced with this epAC. The coronavirus support scheme receipts and overpayments worksheets, which is just a simple add-on to the existing payments worksheets, and then a couple of other updates that we have in respect to patent box. And then I'm going to use the end of the session just to talk a little bit about what our development roadmap is looking like over the next 12 months. So I'm going to go ahead and swap out my screen here, as I'm not going to be in the PowerPoint for too much of this session. It is mostly in product. So there we go. I've just popped over to a file here. So this is a file that I set up just before the webinar. So I'm going to start off by showing the changes in respect to the CT600L. So the actual worksheet itself hasn't changed that much. The introduction of the CT600L really was to standardize the formats of the R&D credit claims that are being made. R&D credit claims have been able to be made in the template since they were introduced, and the worksheet has supported both the SME and the RDEC claims already, and there was already a tagged computation note present in the product. But what the CT600L does is make it a standard format. Obviously, different software products, different users would have been preparing their computations in slightly different ways, and so the new PDF form kind of makes it all very strict and presumably very easy for HMRC to analyze the data from. So under R&D expenditure relief, if I just indicate that a claim is required for an R&D tax credit, all I've done in this file is set it up as a trading entity with a loss. Then, as I say, the enhanced expenditure relief doesn't actually go through to the CT600L. but the credit claim here, so it's the surrender of the loss to claim an R&D tax credit under the SME scheme, does come through. So now that I've popped that in, we should see the CT600L has been prepared. And we should see, because this is an SME file, there's actually not too many boxes on the new form in respect of SMEs, that the claim will have come through on there. So it's just going to build itself. The SME worksheet you will have seen really hasn't changed because there is such limited information required by the PDF. So we haven't had to put through worksheet changes on that. Just going to wait for the PDF to pop through. The majority of the changes in this have come through the RDEC. So it is still loading here. I've opened several files up at the same time for this webinar, so we'll just wait for this one to load up. So here we go. And down towards the bottom, the SME RDEC claim, SME R&D payable credit claim for this accounting period has come through. So now if I go over to a similar file, but make a claim under the large company scheme, we'll see that there's been a few more changes to the actual worksheet in order to break out all of the individual line items that are required by the new form. So first of all, you should be able to see that at the top, the step 2 restriction and step 3 restriction labels have been changed. These restrictions have been moved to the top of the worksheet so that they're explicitly included in this sort of step 1 calculation. We can still enter in our expenditure here. So I'll just pop through some qualifying expenditure, and then the RDEC will populate automatically. Then what the worksheet is going to do is it's going to proceed through the 7 steps of the calculation, which are mirrored on the CT600L. So we can see that the step 2 and step 3 restrictions being applied at those stages respectively. Under step 2, obviously the restriction is with respect to the current year corporation tax liability. As we go down, we can have under step 3 the relevant PAYE and national insurance. So let's just have this entry a little bit limited. And then the amounts under steps 4, 5, and 6 discharged against corporation tax of other periods, surrendered to group members, or discharged against other liabilities, respectively. So crucially, under step 6, the amounts used to discharge other company liabilities on this self-assessment return have been broken out from amounts used to discharge any other company liability. And also under step 2, if you have selected for this company to be a member of a group, the surrender of a step 2 restriction amount to a group member can be put through here. So in order to do that, you would need to go through the company details and indicate there that the company is a member of a group. So not the hugest of changes. Down at the bottom as well, if you have indicated on this that we have a surrender under both schemes, or if you're making a claim under the RDEC scheme, but it is an SME that's making that claim under the RDEC scheme by virtue of it being subcontracted by a larger company, or if it's authorized work, then the relevant amounts can be populated down here. What I will say is that these, the total of these two, so the SME RDEC claim amounts must reconcile to the total amount of RDEC payable to the company. So the sum of these two boxes must reconcile to step 7, otherwise you are going to see an error come through. So I'm going to go over to the computation and just show that the same changes have been made on the computation at each stage. There we go, it's going to build the PDF for me now because I've triggered a recalc by changing position. Too many mouse clicks, clearly. So if I just wait for the computation to load, I should be able to head down and we'll see the same breakdown of figures that was shown on the worksheet will be appearing in the computation, so that you can easily reconcile what's going on here with what is going on the CT600L. So I probably should have pre-built my my PDFs before opening this up on a live webinar. So here we go, the amounts under steps 1, 2, 3, etc. And then we can see down at the bottom the summary showing the amounts that flow through to boxes 530, 870, 875, 880, etc. so that you can more easily reconcile what's happening in this computation to what's going on the CT600 itself. So if I go over to the forms, we should see the PDF come through, and we'll see that the PDF has been much more substantially populated because the RDEC claim occupies the majority of the form. So yeah, my restriction here of PAYE and national insurance has come through, and then the box L125 figure going through to box 880, and then the reconciliation of box 530 down at the bottom, so the amount set off against liabilities on this company tax return. So this was a trade loss file, so there is no corp tax liability to offset. So hopefully that explains the changes for the new CT600L form. As I said, they're not the hugest in scope on the actual worksheets, but it has been a restructuring, rearranging, and breaking out several of the entries that were previously aggregated so that we can isolate every box on this new form. Sticking with the R&D theme, if I go over to my file for a capped claim. So as I mentioned, there is a new cap on SME relief, R&D relief, that is brought in from the 1st of April 2021. So I've set this file up in advance. Obviously, this is quite forward-facing. The rates on this file may not come through. Oh, did I hear something there? No, clearly not. So if I go ahead and just pop in some qualifying expenditure here, we will see where that limitation has come through. So here we have the enter the company's PAYE and NIC liability for the period, and then the cap will calculate based on that entry. So let's say there's quite a substantial amount of PAYE and NIC for the period. We can see that the cap will calculate. The cap is equal to £20,000, which is pro rata based on your accounting period for short periods or stub periods. And then it's 300% of the relevant PAYE and NIC. So it's an anti-avoidance provision really that they've brought in. So it just adds in this one additional step into the SME credit computation when you're looking at files with a start date after April 21. What I will also highlight on this file, because it does straddle the expiry of the temporary annual investment allowance uplift, is that it will perform this file will perform the allocation of the annual investment allowance to pre and post that reversion. So the £1 million up into the 1st of January 2022, and then the regular £200,000 per annum limit afterwards. So that is all in the product. Obviously, it's going to be latent for the majority of files because they're not looking that far in advance just yet, but you can run estimates on that if you need to, because all of those calcs are built in. If you want any more information on that, it was covered in more detail in the webinar for, I think it was either CT3.12.04 or 3.13.01. So in terms of other content, as we can see the split here. In terms of other content in the EPAC, I'm going to pop over to yet another new file, imaginatively named Other Updates. So we have put through the rates and forms updates. So the version of CT600, which is in this file, is new for April 21. You will also note that the taxonomy has been updated to the 2020 version, as the 2019 version expired on the 31st of March 21. So if you do have a file with any dates after the 31st of March 21, you will need to be using the 2020 taxonomy to get that one in. I will note that presumably because of COVID, we haven't had any information on a 2021 CT comp taxonomy just yet. So for the foreseeable future, we will be working off the basis of the CT comp 2020 taxonomy. That has not been given an expiry date just yet. But as we hear more information on that, we will update the product accordingly. The 2020 taxonomy included a number of new tags. So we have introduced a couple of new worksheets. There is a dedicated IFRS 16 adjustments worksheets in Corp Tax now, so that those items can be broken out and tagged specifically. Previously, the IFRS 16 adjustments would have just gone through on the other adjustments worksheets. Then we've added a new section for off-payroll working adjustments, and this is limited to the fields which are requiring tags in the new taxonomy, or for which tags are available. So gross net turnover, tax and NIC deductions, and then the adjustments themselves in respect of IR35. There has also been an update, if I go through to company details. There's also been an update to the patent box module for the July 2021 8-step calculation. So the 5-step and the 8-step calculation are both in there. So the 8-step, the new calculation, is mandatory for all old and new intellectual property from the 1st of July 2021. Under the new rules were already in force for new IP from 2016, but old IP was able to use the old rules up until the 1st of July 21. So it's all new from that time. And then probably the one that we will be seeing the most, or the change with the most wide applicability, underneath tax liability and payment dates, we have a new coronavirus support schemes and overpayments worksheet that comes through here. So it's just a few entries for the entitlement, the receipts, and any overpayments already assessed. The overpayments are clawed back via the corporation tax return. There's no mechanism for underclaimed amounts. That is all outside the scope of corporation tax. But I will note that all of the relevant boxes on the CT600, so all of the boxes in this section, are required to be positive. So you can't have a figure coming through in box 526 or 527, which one is it? 526, which is a negative. So your total of boxes 471 and 474, so your amount claimed minus, or the entitlement minus the amounts received and assessed, already assessed as overpayments, must always be 0 or greater, and you will see diagnostics in the product relating to that. So that's HMRC's logic checks on their gateway imposing those. So I actually went through that a little bit quicker than I expected. I'm going to pop back over to my PowerPoint now. And talk a little bit about our upcoming development for corporation tax. So obviously we had the budget in March, where there were a number of announcements, some of them coming into force very quickly, some of them not coming into force for some time. So they're much further down the road. We are obviously focusing our development on those changes which are coming into force quickly. So in particular, the capital allowances super deduction, so the 130% first year expenditure allowance for items that would ordinarily fall in the general pool. So you would ordinarily apply your AIA and leave the rest for general pool writing down allowances, but now you can claim a 130% first year expenditure allowance, which is obviously quite different from what we're used to. It's not just an acceleration of the allowances on those purchases of assets, but you actually get an enhanced allowance for that. So your tax bill is going to go down as well as being accelerated, as well as the relief being accelerated. The super deduction also, by the way, includes a 50% first year allowance on special rate expenditure. So this is going to apply for 2 years, I think, from April 21 to March 23. So all general rate and special rate expenditure, which would be normal sort of qualifying expenditure, definitely worthwhile to accelerate any purchases that were planned for after that period to be into this period, because the 130% and 50% reliefs are extremely valuable. It doesn't apply, it's got the usual sort of caveats on first year expenditure, so no cars, and it applies specifically to new assets, not second-hand assets. So we're working on updates for the capital allowances sheets to bring that in. Obviously, it's quite complicated adding in the new pools and adjusting the existing summaries because of the interactions that we have with the annual investment allowance as well. We're also looking at adding content in respect of the temporary increase in loss carryback. Sorry, my monitor just reset itself. They've increased the carryback period for trading losses from 1 year to 3 years temporarily, although they have capped it. So it's effectively like a little bit of, it's almost like they've applied the terminal loss relief rules temporarily. So we are going to be updating the losses worksheet in respect of that cap and that carryback. The carryback should already be possible in the existing worksheet, but you might want to add a couple of computation notes to set out exactly which year you're carrying back to. We're also making some tweaks to the losses worksheet in respect of amendments to the post-April 17 loss relief rules, but again, not huge ones, changes to the calculation of the relevant maximum. And then further down the line, adding support for free ports. So their special rates and allowances, enhanced allowances. We've also got in the upcoming EPAC for May, sorry, I'm referring to it as May, but it will be released in June because we're working on it in May. The XBRL computation tags, we're updating the contexts to cover more unincorporated entities. So even for clients using the company accounts advanced templates, being able to tag a computation for unincorporated entities. So mutuals, associations, other non-corps. The reason that May comes up in my head for this is because there is an update to the online service from HMRC coming through in May, and we will be releasing our EPAC. It is scheduled to go out in June in response to that. That set of changes should not be enormous, but we are still wanting to update the product soon afterwards. So this is a little bit of an acceleration of our normal quarterly release schedule. That next release, a Q2 release, is just being brought forward a bit. We're then looking forward to sort of our normal annual updates next year and updates in respect of our cloud trackers, where we're going to be bringing those more in line with the trackers which are available for the accounts and audit products. The corporation tax tracker was the canary down the coal mine for the tracker tech in general. So we're just making sure that it has all of the bells and whistles that the accounts and audit trackers have. So in sort of rough time frame, yeah, we're looking at June for the most urgent changes. So we're focusing on budget changes in force now for our Q2 and Q3 releases. So EPACs 13.03 and 13.04 respectively. And then next year we'll be looking at early updates for financial year 22 and a full update towards April next year. So I have got through this much faster than I did on rehearsal. So I'm going to hand back over to Tom, who's going to see if any questions have come in. And if any of you guys have any questions, here's information on how to raise those.
Thanks, Kyle. So we haven't got any questions at this stage, which presumably means that everyone is happy and with what they've seen, but please don't be shy. If you have any questions or if you'd like any more information, you can use the chat field there. We're going to be on here for at least another 5 minutes or so, so you can pop anything you want to in the chat there and we can get back to you. Also worth pointing out that the release notes for this ePack are in the handout section. So if you go to the handout section of the control panel, you have a PDF there you can download, which will just summarize the release notes. You can also get those off on the knowledge base with the article covering the update. So as I say, question fields open. You can pop those in there or pop something into the chat. You can also use your microphone to ask any questions live. In terms of any additional resources, then you pop the knowledge base. And also, if you're not familiar with our YouTube channel, I'm skipping ahead a couple of slides, of course. Kyle's panicking because I'm talking about a slide that we haven't seen yet. So what we'll do then first is we'll jump to the next slide, which is covering our upcoming sessions. Currently, if you go to caseware.co.uk/events, you'll see that we have the one listed, but we have others that are due to be listed. So we've got our SE key features session on the 20th, but we also have a few more that will pop up there very shortly. So keep an eye on the events page. You can see the agendas there. You can register to attend our sessions. On the next slide, I believe we are looking at our social media presence. Note the next slide is confirming the events page location. So if you're on our website, you can go to the resources tab. LinkedIn and YouTube. So we have our CaseWare Client Services LinkedIn page, and that's where you'll see updates for webinars, updates within the business. And YouTube houses all of our recordings and also has a wide library of quick vids. So you can head over to there and see the various playlists that it's split into. We do have a corporation tax playlist, and we'd very much welcome your feedback based on what you see on those pages. So if you want any content that we are not currently listing, then please let us know. You have also got the option to comment under the videos and like and subscribe, of course. So if you subscribe, you'll be notified when new videos are added. And then you also have the knowledge base, of course, which is kb.caseware.co.uk for all of our articles, videos and recordings, as well as downloads, so including the download of this ePack. So we are still quiet on the question front, so we'll leave it open for another couple of minutes, but you can always get in touch with us afterwards. You also got the feedback survey, which will pop up after we close GoToWebinar, and we'd very much appreciate you completing that so that we can get an idea of how you found the webinar, what future content you'd like to see in webinars, and you can also use that to submit any questions. So I think we'll finish up. Keep an eye out for the recording, and if you've got any questions that you send in, we can always retrospectively create a Q&A document to go with the recording. Thanks very much for joining us today. We hope you found the session useful. Enjoy the rest of your day and your weekend, and we'll see you soon.
Thanks very much.